Imagine waking up to the sweet sound of money being deposited into your account, even while you were sound asleep. It sounds like a dream, doesn't it? But what if I told you this dream could be a reality? Picture yourself on a well-deserved vacation, exploring exotic locales, or simply unwinding on your couch, binge-watching your favorite shows, knowing that your income isn't tied to your physical presence or active work. This is the power of passive income, a concept that allows you to generate wealth even when you're not actively working. It's about creating systems and investments that work for you, tirelessly, day and night. It's about your money working for you, diligently growing your wealth while you focus on the things you truly enjoy in life. One of the simplest and most accessible ways to start building this passive income stream is through the magic of dividend investing. It's a strategy that's been used by savvy investors for decades to generate consistent income. When you buy a stock in a company, you're not just purchasing a piece of paper or a digital asset, you become a part owner of that company, sharing in its successes and its potential future growth. You're essentially a business partner, albeit a silent one. If the company profits and thrives, generating substantial revenue, it can choose to share some of those profits with you, its valued shareholder, as dividends, a reward for your investment and your belief in the company's potential. These dividends are typically paid out as cash payments, usually every quarter, providing a regular and predictable income stream. Dividend investing, therefore, means carefully building a portfolio, a collection of stocks that consistently pay you regularly, creating a reliable and growing income stream over time. While capital appreciation, watching stock prices rise, is certainly a welcome bonus, your primary goal is to create a steady and dependable stream of income, a financial safety net that provides peace of mind. Think of each share you own as a tiny cash machine, a miniature money generator, diligently sending you money on a predetermined schedule, quarter after quarter, year after year. The more shares you accumulate, and the more diverse the range of companies you own, the bigger and more robust your income stream grows, providing you with greater financial freedom and security. You don't need to be a seasoned Wall Street expert, poring over complex financial statements and market analyses. Just focus on identifying solid, stable, and well-established companies with a proven track record and a long history of consistently rewarding their shareholders with dividends. Think of household names, brands that you know and trust, like Coca-Cola, a company that has been quenching our thirst for generations, or Johnson & Johnson, a stalwart in the healthcare industry providing essential products and services to people around the globe. By strategically investing in these types of established and reliable businesses, you're essentially partnering with some of the world's largest and most successful companies, sharing in their prosperity and long-term growth. You get to collect your fair share of their success, receiving regular dividend payments as a reward for your investment, all without having to actively manage the business yourself or get bogged down in the day-to-day operations. That's the true magic and allure of getting paid to do nothing, the beauty of passive income through dividend investing. Want your dividend income to grow faster? Reinvest your dividends. Instead of spending the cash, use it to buy more shares, automatically with a dividend reinvestment plan. DRIP. Each new share earns its own dividends, creating a snowball effect. Over years, this compounding can turn small investments into significant wealth. You earn returns not just on your original money but on the returns themselves. Even modest, consistent investing can grow large over time. Reinvesting is a simple, hands-off way to build wealth. Every dividend payment increases your ownership and future income. Set up a DRIP, let compounding work, and watch your passive income grow. It's the patient investor's secret weapon. When it comes to dividend investing, the quest for the best stocks is paramount. Where do you find the best dividend stocks? The market is vast, and the choices can seem endless. But there are specific groups of companies known for their commitment to rewarding shareholders. Start with dividend aristocrats. These companies represent a gold standard in dividend reliability. These are not just any companies, they are companies in the S&P 500, the benchmark index for the US stock market. But to earn the title of dividend aristocrat, they must have achieved something truly remarkable. They have raised dividends for 25+ consecutive years. This is a testament to their financial stability and dedication to shareholders. These are stable, blue-chip businesses, the kind that form the bedrock of a solid investment portfolio, like Procter & Gamble, a household name with a diverse portfolio of consumer staples, Coca-Cola, the beverage giant whose brand is recognized worldwide, and Johnson & Johnson, a healthcare behemoth with a long history of innovation and shareholder returns. They've weathered recessions, economic downturns, and market volatility, demonstrating resilience in the face of adversity. And through it all, they have still rewarded shareholders with consistent and growing dividend payments. For even more reliability, for those seeking the ultimate in dividend consistency, look at Dividend Kings. These are the elite of the elite. These are companies with 50+ years of dividend growth, a half-century of unwavering commitment to increasing shareholder payouts. Consider 3M, a diversified technology company with a presence in numerous industries, and Colgate-Palmolive, a global leader in consumer products found in households around the world. These companies show incredible financial strength, boasting robust balance sheets and consistent profitability. This financial fortitude translates into a strong commitment to investors, a dedication to returning value through dividends. Focusing on aristocrats and kings, these dividend-paying stalwarts helps you filter for quality and consistency, narrowing your focus to companies with a proven track record. While nothing is guaranteed in the world of investing, it's important to remember that past performance is not indicative of future results. However, a decades-long track record is a strong signal, suggesting a company's ability to navigate challenges and maintain its commitment to dividends. Build your core portfolio, the foundation of your investment strategy, around these champions, these dividend aristocrats and kings that have stood the test of time. You're aligning with businesses, partnering with companies that prioritize steady, growing income, a reliable stream of cash flow for their shareholders. That's the foundation, the cornerstone of smart dividend investing, a strategy focused on long-term growth and consistent income. Dividend investing is safer than many strategies, but not risk-free. The biggest risk? A dividend cut, when a company slashes or stops payments, often due to trouble. That's why diversification is crucial. Spread your money across different industries and companies. Don't just buy one sector. Mix consumer goods, healthcare, utilities, banks, and more. If one area struggles, others can keep your income steady. Stock prices will rise and fall, but focus on the income, not daily swings. As long as dividends keep coming, you're still getting paid. Diversification and patience are your best defenses. Dividend investing is about building wealth slowly, steadily, and securely. Start small, stay consistent, and let your income stream grow for years to come.